Hello and welcome to the Weekend Investing Daily Bite of 28th of October and a small bounce in the market. There was a expectation of a downside this morning, and actually market did open on the downside. Small caps, especially small caps and mid caps. The Nifty recovered first, and then the Nifty Junior, and then mid caps, and then small caps, and they all ended up in the green. The relief rally, if we may call it that way, uh, seems to have been triggered by a lot of narrative that the war may be coming to an end, and the fact that this is a sort of a week leading to Diwali, and maybe people are squaring up their short positions of the last 2 weeks. It is still not clear what will be the expiry day this week, because on the calendar, Nifty calendar, NSE calendar, we have Diwali as 1st of November, whereas a lot of folks are suggesting that it is actually going to happen on 31st. So maybe the holiday will get moved by one day up, and that may cause the expiry to come from Thursday to Wednesday. All that is still flexible because we haven't heard from the exchange yet. So this week is likely to be light. I'm not expecting too much of action this week, especially on the downside. I think significant correction in the last 2 weeks happened. There may be more to go, but for now, it seems like a bounce is there. Crude oil has collapsed 6 to 7% just over the last day, and that is always good news for India going forward. I think, as I mentioned in one of the tweet, it is high time that the government now slashes the rates at the pump, because the economy seems to be a bit sluggish, and to pump prime the economy, this may be one of the really good measures, low hanging fruit, that the government can consider. So will the markets throw a surprise party this week? If you have been waiting for lower levels, what happens if the market doesn't go to your level? How will you take a decision? We will talk about all this in the second half of the video. Please do read the disclaimer very carefully, and do subscribe to the channel if you haven't so far. It'll be a surprise if you haven't done that so far, but my request is please do it now, if not yet. So where is the market headed? The market's jump was extremely benign. You really cannot say that the jump was anything material. 0.65% by close. Yes, at around 2 p.m. we did hit almost a 2-day high, but did not close above it. So my thumb rule for at least a high probability turn is that a stock or a sector or an index should close at a 2-day high, above the previous 2 days high, and that has not happened. So it is still in some sort of a flux. There is full chance that it can go down further as well, or it may try to, you know, uh, catch up in this light week, because this is sort of a support zone. This 23,900, 24,000 is sort of a support zone, and we've come off pretty steeply here. So maybe some bounce, and then we may go down if we have to go that way. Nifty Next 50 also in a similar pattern, where this pivotal bottom mid of July sort of has been respected so far, and we have a small 0.45% bounce, but really, I mean, nothing much as such. This bottom probably is very significant going forward. Break of this, sort of also creates a small head and shoulders pattern on this. In the mid cap space, it was more pronounced, 0.64%. Again, it is very far from the moving average. It is steep fall, so a bounce can always happen, and then the next step can be up or down. Small caps also similarly, although small caps being higher beta, up 1.15%, and on a support basis, it does look like we've taken some support here. There was a gap in the market here, uh, beginning of August, which has been filled and supported in the last two sessions. So these two bottoms now become very important going forward. Overall, the structure is still tentative and down. There is no way to say that the structure is up as of yet. Bank Nifty actually went up beyond yesterday's high at some point, but succumbed to profit taking. Some banks have now released some decent numbers. I believe I saw PNB and Bank of Baroda, but then I haven't looked at those numbers in depth. Neither do I do that normally, but it does seem like some consolidation phase may be here. It's not a free fall as such happening on Bank Nifty, 0.9% up on Bank Nifty. In the advanced decline of CNX 500, the bias was towards the advances, 331 advances to 169 declines. So that is always a good measure to have. In terms of the FI trends of the last day, 25th of October, FI continue to sell at 3,000 crores. DIIs continue to buy at 4,000 crores. So their buying and selling is almost evenly poised on that front. Heat map for today, this should have been adjusted by TradingView. They haven't done that so far. So this is the bonus, X bonus. So Reliance hasn't dropped by more than 0.25%. ICICI Bank, after its spectacular results, is up 3%. Wipro is up nearly 3%. Mahindra and Mahindra bounced along with Eicher Motors and Tata Motors. Hindustan Lever also there is a bounce. And you also had JSW Steel, Tata Steel, Hindalco, Sun Pharma, Adani Ports, all doing quite well. Coal India was smashed down post results, minus 4%. Bajaj Auto continues to reel down, minus 1.9%. You also had Kotak Bank, Axis Bank go down. Here, uh, I think this was Dr. Reddy's. No, one stock has gone split or bonus here. I'll find that out. Uh, in the Nifty Next 50 space, you have fantastic gains coming through from Vedanta, from REC, PFC, IRFC. All railway stocks were up. PNB, you can see up 3%. BHEL, although they have done some change in accounting pattern, and that's why the profits are there, some people say, but yet to know. Plus 6% on that counter. Geo Finance up 1.7%, and DLF on announcing of its mega project where they're going to sell 100 crore apartments, up 5.9%. They're going to make a lot of money on that project in the interview they said. Dabar, Ambuja Cement, and JSPL also up. JSW Energy lost some ground. Indigo nosedive down almost 11% and then recovered to minus 8% post results. Torrent Pharma down, ABB down, Chola Finance also down, and some other stocks like Pidilite, United Spirits, BBL Havels also were reeling. So mixed bag. Mostly the bounces were seen in oversold stocks. So these are not really uptrends, they are basically bounces. PSU banks, you can see, bounced very, very hard, plus 3.8% for the day. That's a huge bounce for any sector. Maybe there is some interim bottom that is happening here. Metals also bouncing very hard, 2.5% there. Real estate up 1.4%, pharma up 1.3%, and the rest were minor below 1% kind of gains. No sector was in red. That was the important part of the day. You can see here Indian Bank jumping 10.6%, Canara Bank, Bank of Baroda, Union Bank, Central Bank, all in 3 to 7% kind of gains today. Stock spotlight was on Indian Bank. It has gone nowhere since Feb 2024, and today also, after jumping 10.6%, it is still nowhere from Feb 2024. But nevertheless, uh, a, a potential that this may now try to tag its previous highs, given that the results have been exceptional on this counter. And it has rallied very hard from the COVID bottom. 40 rupees was the price then, 551 now. So I mean, uh, it has done very, very well in the last 4 years. Let's see where this goes from here. So will the markets throw a surprise party is the topic for today's discussion. Have you been waiting for lower levels? Will you get the lower levels, or will the market surprise you is the question. So we start to hear many narratives when the market becomes little weak that, I am sitting in cash, I am going to buy at so and so level, I am going to buy below 200 DMA, I will buy when, DIs start to sell. And people make up their mind and fixate it basis some narrative in their mind that I will buy at that uh, point of action. But that point of action may or may not come, right? And you may just get stuck with your thesis that no, I want to buy there only. So if we see, like for instance, 200 DMA is a common one that, I want to buy below 200 DMA, or market is going to go to 12,000, 15,000, whatever that narrative may be, or RSI will go down below this, I will stay in cash till then. I'll liquidate everything and stay in cash then. So when you have all these kind of narratives, and if in case somebody you meet who is very confident in their, narration and is on the same wavelength and thought process as you, then you have a confirmation bias. The two, three people are confirming that yes, my thought is correct. I should be doing this only. So, 200 DMA is a common one. Now, what happened? Maybe a lot of folks were waiting for a 200 DMA, index to go below 200 DMA to buy. And when the election outcome was there, it nearly came close to 200 DMA, but it never closed below it, nor did it touch it. So a lot of cash which was generated ahead of elections, a lot of folks had generated cash ahead of elections, thinking that post elections they will get the markets below 200 DMA, never got that chance on that day. And then the market went up almost, 15-20% post that. Now it is coming off. It is still much above where you were below the elections. So if you were waiting for this 200 DMA, you are still waiting for that 200 DMA, and the 200 DMA meanwhile has moved up quite substantially. So 39% is the jump in Nifty since we last touched the 200 DMA. So if you were waiting here, or maybe if you were waiting here, I mean, it has not happened since March or April of 2023. So that kind of narrative, maybe after this rally, you may have thought that I'll buy at 200 DMA, but it has not touched since then. So you have been waiting for the last year and a half while the market has kept running up all this while. So, what may happen? Maybe market may come down, or market may go up another 30% before it decides to meet the 200 DMA. How will we ever know? I mean, this point could be same as this point, could be same as this point. Yes, this one was below 200 DMA, but for the next two times it didn't come to 200 DMA. So we don't know. I mean, to have that thesis that no, I will buy only below 200 DMA in the last two times has failed. Maybe if you buy it right here, it will go below 200 DMA post that. That can also happen. So those kind of narratives, you should not have a fixated view on that. You should have regular investing, and then maybe some lump sum if you want to keep for some special event if it happens. Now another narrative that is going around is the head and shoulders pattern that has been formed. And the logical sort of, this was the head and shoulders pattern. You can see the shoulder, head and shoulder. Normally whatever is the head is the travel distance between the neckline. So neckline is pointing towards 23,300, similar to the election day high. Now we may go here and come back. We may go to the extreme, or we may go further lower also. So don't fixate yourself to this pattern. Yes, there is some probabilities you can associate with this, but then again, I mean, this entire fall that we have seen, what if the market starts to go up, and by this time, maybe end of November or December, you may feel that this was a great opportunity that you missed because you were waiting for 23,300. So that is another sort of thought process that you need to think about. Then another one could be, I will only buy, if there's a 10% correction. So, after COVID rally, this was the COVID rally, then the market went into a 18% correction, and then it recovered from nearly 15,000. Nobody thought that it's going to go up like that, and people thought that every 10% I'll keep buying, so I'll divide my money across 3, 4, 5 tranches. And you just realize that only one of those tranches you were able to deploy after 10% down move. Then 20% never came, and then market went up from 15,000 till 20,000. So what if, you are waiting for 10% correction at that level, and that correction never comes, and market instead goes up 30%. So you are trying to optimize for a 10% gain, but you are losing 30% on the upside by doing that. So again, maybe this 8 or 9% fall that we have seen, maybe this is the end of it, or maybe this is just the starting of it. Of course, I don't know. But a lot of times such opportunities will get missed because we get fixated about that I'm going to do this only if this condition is met. So correction may always come, and you have to fully embrace that, but you don't have to wait for a bottom to form, because usually what will happen is that whenever bottoms will form, the either the fear factor will be so high at that point that you will not be able to press the trigger, or if it is not so bad, like for instance right now market is down by 7-8%, most strategies are down, let's say between 8 to 15%. It is not so bad right now, right? But if the same thing is minus 30%, then there's a lot of bloodletting at that point, and you may start to feel that why should I put more good money, my all original investments are already down so much. Those kind of thoughts will start to come in your mind, and they reinforce themselves. The more you think about it, they will reinforce themselves. So to get out of that, at least that's what's helped me in my journey, at least, is that I don't overthink about any decision. I have created certain strategies, I have created certain decisions, that this is how I'm going to deploy my money every month, or if I don't have any savings, then every 3 months, or whatever may be the case. But then I will not think about it, what is the market level, because I am deploying it for 5 years. I am deploying it for 10 years. I'm not deploying it for 3 months or 6 months. So if your outlook is to make good money over the long term, then whether you are deploying it at minus 10 or whether you're deploying it at minus 15 will not make so much of difference, especially if you are not able to deploy when the time is right. That is the whole issue, is that most people will not be able to deploy when it is time to deploy, and that is why the reason is that markets go down, because there is no buyer in the market at that point. The reason for a market to fall is not because people are selling, because there is no buying. And this can happen to you. I mean, you are here, you are waiting for this, since here you are waiting, and this doesn't happen, and then the market goes up and then it corrects 10%. So was it better to, buy here versus to buy here, is the question. But of course, there is no right or wrong answer to this. So let me know your thoughts, how you are going to allocate your money in this current downfall. Have you already invested? Are you going to wait any longer? What is your methodology? Please share. Other folks may also like to hear from all the community responses, and let's have a discussion on this. Thank you so much for watching, and please do like and share these videos. Do also pass them on in your WhatsApp groups with your friends and family. Who knows, somebody may benefit out of this. Thank you. Bye bye.